Welcome to the Crazy Wisdom Podcast. My guest today is Jenna Biancavilla, and she's a multipreneur in bold financial services and technology. Welcome to the show.
Thank you for having me today.
Before we started recording, there was a discussion of what does it mean to work? What does it mean to live? And particularly in our global world where we're in two different places, and you're running a financial business, which is regulated by, imagine, both the federal government and the state government. And I'm really interested to understand what does it mean, because I think a lot of people in the world are going through a lot of changes, philosophically speaking. And there's a lot of people who are essentially don't have a home anymore, digital nomads or switch homes. And what's your take on all that?
This is such a fun question. And we started with, I'm kind of envious that I can't just pick up and move to Argentina. It's seemingly not an option for me, just being in a highly regulated industry. And I can get really nerdy talking about regulations and bore everyone, so I'll try to not do too much of that.
Well, actually, so my audience would loves talking about the nerdy details. I hope they do.
Well, we'll see how many people listen through this then. But as far as dealing with borders, for financial services, if you're a small firm, you are state regulated and you're dealing with state borders. Luckily, we're past that. We're considered a large firm by the SEC standards, so we're federally regulated, so we get to easily work across all state borders. But now we are dealing with the international borders, right? We can't just give financial advice to people who are outside of the regulations of our country. And candidly, we don't even have the experience to do that because there's different regulations for those different countries. But the next thing that is kind of the line that's drawn is the regulators will say, where is the advisor sitting and where are they consistently meeting with clients? And that's the word consistently. So you kind of have to, if I have a second home in a different state and I take meetings there, now that second home is my second office and I need to register it. And then they ask, where are your clients? With the SEC,
You have to register
So
with the SEC.
Yep, every single office that you're consistently meeting clients with, you have to register the office. So a second home could be deemed an office. And then they ask where your clients are living. And so I have a lot of wealthy clients who have multiple homes. So I have to say, this is a Nebraska client, and we're counting them for those. And if you have more than 5 clients in any state, then you have to register. So there's a lot of gray area with people who have multiple homes and are moving around.
Yeah, it's so interesting. Now, if you were a smaller firm, is there a state body or a state regulatory body that would then regulate you?
Yep. So if you're small, it's each individual state. So when I first started my firm, I was originally registered with the state of Arizona. Once you cross the $100 million threshold of assets, that's when they deem you a large firm, amount of assets that you're managing, and you move over into the SEC. So yeah, I've done it both. Most small firms have to start there as state registered, and it's kind of a pain in the butt to add additional states because it's a lot of work to register with each individual state.
Yeah, so speaking of nerdy details, I went into, I think it's called the Uniform Commercial Code. I went into this because I think like 50 years ago, the United States, both each individual state and the federal government was like, wow, this is really difficult because the United States experienced the same thing that we're going to talk about internationally, but just within the country. And so each state had different regulations. And so if you were working across states, it's just like a total nightmare. Now, in the United States uniformed that. We did our standardization that allowed us to do it. But now we're having the same experience on a global level, which is a really interesting thing. And so we can talk more about it. There's like all these like personal interests I have of what does it mean to work somewhere? And then what does it mean to live somewhere? Because I've been running into these problems. I have my U.S. citizenship in U.S. Then I've got my statehood, which I'm in the process of moving from California to Wyoming. And I'm going to get my personal statehood from California, and I'm going to move to South Dakota, because South Dakota is the place where all the not the digital nomads. It's where all the RV lifers who live in their RVs and go state to state, they all go to South Dakota and spend one night in South Dakota. and then they get statehood in South Dakota, and then can live wherever they want and get mail in South Dakota. And so there's this like crazy thing about living somewhere, which seems like it's going away. And we can talk about this from a philosophical angle, but we can also go into technology and assets under management. What can you talk more about what you're managing?
Most of my clients are individuals, just trying to make sure that, you know, the nest egg that they've built, they can either make sure they're not running out of it during retirement, so they have enough money to not run out of money, and which is most people's fear, or they want to make sure that their kids don't run out of money, right? So they're making a multi-generational dynasty so that the assets that they've accumulated can last a couple generations instead of just, well, what did we do where we just made trust fund babies and they spent it all? Yeah. So it's dealing with some personal wealth struggles and making sure dollars last and their strategy there. And then because I'm a business owner, business owners are attracted to working with me because advisors that work at large conglomerate firms just they don't get it. So we do a lot of exit planning of how to get out of your business, sell it for a good multiple. So usually I try to start working with business owners about 5 years out of selling the business. And you know, I speak business owner because I'm living it and breathing it. So I have a lot of business owner clients and then families trying to hold on to money clients.
Now, the part about the how to do not exit planning, but how to do preserve wealth among multiple generations. That brings South Dakota back into the conversation because South Dakota has an interesting trust system where the trusts, for some reason, actually you might know more than this. Do you know anything about the South Dakota trust? Is that part of the thing that you do?
Yeah. I work closely with estate planner. So I'm not an attorney. I'm not going to draw the trust, but we will work with estate planners that will go across state borders. And now we're back to borders again, because if you die in a particular state, that determines how much you owe in estate taxes. And so retirees will plan to die as residents of certain states to save money for their heirs.
Not only about life, but you got to think about death. Well, and this is interesting because you do exit planning for companies, and companies die. The people in companies die, and the whole point of a company is that the company can live out so an exit planning is a sort of death among the contract between the individual and the company itself. What have you learned philosophically from studying all these arcane details in terms of helping your clients like prepare for things that maybe they don't want to actually prepare for?
So this is interesting. We could really take this conversation a lot of different ways, but two things that kind of come to mind is I'll briefly touch on the border one more time, the state borders. Where you are a resident determines what state tax you're paying when you sell your business. So people will strategically try to make sure they're living in certain states so that they owe less in state tax when they have that huge multi-million-dollar sale. Depending on where you live, that state tax can really eat away at your nest egg. But moving over to kind of philosophical or even maybe some psyche in there, most business owners, this is their identity. This is who they are. They identify as an entrepreneur or business owner. This business is them, right? You meet someone, you're like, hi, I'm Jenna. I own a finance firm. Like, this is me. And so when you try to start making a plan to sell someone's identity, they unintentionally, right, subconsciously will start self-sabotaging because they don't know who they are. They don't know who they are when they sell this business, and they don't know what the next stage of life looks like. And so a lot of times I'll bring coaches in, like therapists in to make sure we know who their identity is outside of this business ownership, so they don't do these silly self-sabotage things, which we saw countless times. And finally I said, I need a therapist because I don't have the skill set to coach people from, taking what's a really good deal. If the goal is to sell the business and we have the best offer on the table, that's the goal. I'm a spreadsheet person, so I want to make sure that the spreadsheet makes sense.
Do you help people who normally, is it normally an age thing, or are part of your clients also just like, I don't want to do this business anymore, I want to do something else, help me sell this business?
Yeah, those ones are easy.
Yeah.
The ones that are
they know what
just,
they
you know
want.
what, this business has run its course. The exit plan was to sell eventually. I'm, 45 and I want to do something different. Those are easy sales because people know what the goal is.
Yeah.
It's the people who are 65, 70, the next step is retirement, and it's kind of this elusive, what am I going to do? I'm going to be so bored. I like my job. Those are the harder ones.
Okay. It's really interesting. State taxes, we've got sort of different states. We've got the federal system. What are the things that you have to sort of be careful in terms of regulation with the SEC? What are the things that you can't do? What are the things that you can do? I'll set this up a little bit more. I grew up in the world of venture capital, so people around me were always talking about venture capital. And venture capital seems like an edge case. Because it's not as heavily regulated as other parts of the financial sector. To zoom out, can you give us what is the financial sector? And you're like an independent business owner, and you're helping other independent business owners, and then you've got these just giant gorillas in the room who also have regulations, large companies who can kind of navigate these things. And can you talk more about from the meta perspective, what is the financial sector?
Okay. So what's interesting is even though we are an independent, it's called a registered investment advisory firm is how my firm's set up, RIA. We're a fee-only fiduciary, so we fit in that very small percentage that don't charge commissions. But our regulators, the financial services, they don't want any more Bernie Madoffs. They're trying to regulate this and control it. And so for even independent shops like us, we have to use the gorillas. So we call them custodians, which is where we house money. They're a third-party checks and balances. As a third party, they hold the money, so we're never actually holding assets. But we have to reevaluate them annually and make sure that this is the best custodian. So we're constantly changing from Schwab to Fidelity or whichever big gorilla, to use your term, we need to use to house money. But we check them, so we're always reevaluating: are your fees good? Are you getting good spreads on the trades? Are your statements right? Are you reporting to the IRS correctly? Is this checks and balances working for us, for our clients? So we still have to lean on them and use them just because regulations don't want someone like Bernie Madoff housing the money and sending out false statements and lying to clients and stealing money. So this kind of puts a regulation, puts a third party in between the client's assets and the small firm that we are. It makes us a large firm in feeling. It makes us, have all of the checks and balances and insurance around it. So our clients feel really comfortable. So that's kind of how we're regulated and how we're playing in this world. To bring in the venture capital question you have, they still have to do paperwork with the SEC. It's called a Reg D investment when you're exempt from needing to do the full filing that firms like me need to do. But you still need to go in. And so if you're being pitched an investment that you're like, this seems a little shady, what is this? It's not registered, it's not official. You can go on to, it's called Edgar database, and look it up and see if they're actually registered or have they done the paperwork with the SEC to be a Reg D investment. And if they didn't register for the exemption to sell in the first place, this is a Ponzi scheme. Don't give them your money. They're not doing it the right way. They don't know the regulations of the world they're playing in.
Yeah, this is a very fruitful topic that we can get into. I am constantly trying to understand the world, and I'm trying to understand the world that it will be. And there's a lot of changes, and we can talk about crypto and your understanding of crypto and how it plays into all this as well. But from my perspective, regulation really makes sense. And here I am in Argentina, where there's a government that was just elected that is trying to remove a lot of regulation. And ideologically, I'm in the same boat as them. I think that a lot of the regulation doesn't make sense. But they are trying to protect against people like Bernie Madoff, who I've watched this fascinating documentary on Bernie Madoff, and it's these like small little edge cases. It's the same problem with the forest fires in California. Most of the forest fires are started there in my hometown, or in the place where have a house right now. This goes back to that point of like, do I live in California? But back in my hometown in California, there was a fire that was started 3 weeks ago, and they picked up the guy who did it, and it was an arsonist. And it's just these like crazy people who do these things that then require the state to come in and protect people against these like small little edge cases. But for the most part of the people, like 90% of the people aren't trying to do any of that. It's just these small edge cases and then it's all building into this system that tries to protect people, but then there's going to be new things that happen. I guess this is a perfect time to talk about crypto. Because you talk about technology as well. Well, actually, first let's talk about how you're using technology in the financial system, and then then we'll talk about other examples of technology. But can we start with how are you using technology?
So this is really fun how this all kind of comes together, because I hate regulation just for regulation. I being in such a regulated industry, all of these politicians who get a microphone and say, I'm going to regulate Wall Street, and then they get in office and they're like, well, I have to fulfill this campaign promise, and I can't even like imagine a new rule because they already have so many rules. One of the rules we lived with under up until about a year ago, they just started changing this rule, is testimonials are illegal. So every web developer was like, you need testimonials on your website. I'm like, they're illegal for us. We can, like you can't go and write a Google review about me because the SEC is going to get mad. So they just wild rules that are just different than the rest of normal business. And so there's part of me that's just, these regulations are so burdensome, and they actually don't help the average consumer, right? Yeah. If the average consumer wants to go read, like, this guy screwed me and did bad things with my money, we're not allowed to have testimonials, and so they can't even read that review. So they're starting to change it. We haven't fully adapted it yet. There's some movement in this rule, so happy to see that. But sometimes the regulations are seemingly silly. They try to have a purpose. The intention behind it was so Michael Jordan didn't come out and endorse his favorite finance firm and falsely, like, you're just paying for testimonials at that point.
Because there's the Michael Jordan part, but then it's also, I imagine that part of it might be as well is that people sort of leaving, maybe there's an edge case, but people leaving bad reviews because they were unhappy with the service, but they have a history of going and leaving bad reviews and like, or even gamification through technology of things like Yelp or anything. Does that have anything to do with it?
No, the SEC doesn't care about us.
Doesn't care.
They care. They only care about the consumer. So the regulations are written for the consumer. They're never written for us.
Yeah.
Which is fine. That's who we're protecting. That's what the rules are for. I actually tell all of my business owner clients, there's thousands of rules, hundreds of thousands of rules written to protect humans, consumers, individuals. There's not really rules written to protect businesses. So businesses, you need to make sure you're ready to protect yourself.
Which is good, because if you're in a business, there's the competitive nature of businesses, and competition helps us to become better versions of ourselves, which is kind of the corollary to the problem that we've been talking, which is that these large gorillas in the room are now regulated in order to win every time, and they're too big to fail, which is a big problem, in my opinion, is that if they're too big to fail, then it means that they're no longer responding to competition. This brings in another piece of technology, which is AI. Because the way that I see the economy going from now, and business and doing new things, is that the new entrants into these fields now have a very powerful technology, which the larger companies don't have an incentive to really use in the same way because they're so large. And so I feel in the next probably 5 to 10 to 15 years, we're going to have large companies that are behemoths that still hire people to do things that AI can easily do, or technology can easily do. And then you're going to have small, scrappy companies of probably less than 150 people, which outperform those big companies, but can't actually compete at the same level because there's the government stepping in and doing certain things that protect those large companies from the smaller companies. Do you have any thoughts on that? Or
well, and this is kind of why I started walking into being, owning a multipreneur, owning multiple businesses, is because this all kind of comes together. I've seen that the financial services industry has a lot of crooks, has a lot of people who are, crooks is probably the wrong word. they're self-serving. They're thinking about their commissions. They're thinking about their company profits before they're thinking about the consumer. And candidly, it's like 86% of advisors, people who are supposed to give advice, that they're thinking about the company's bottom line first, as the company is set up to do. I invest in publicly traded companies. I want them to think about their profits, but it's also a conflict that these advisors are thinking about profits and commissions. They're not thinking about, does this help this family? And so I actually consistently had this problem. I was growing Pearl Capital Management to try to solve this. We consistently saw a lot of people who were taken advantage of by people who kind of had this predatory sales thing. And you can't grow a service-based business big enough, fast enough to really affect change. And thus far, regulations haven't done much to pull out the bad actors that are just thinking about their bottom line. So Savvy, a technology platform that my sister and I put together, that, a lot of it is doing the vetting on how we can use computer algorithms to do vetting. How are they charging? Are they registered? Are there complaints against them? Are their licenses active? We're using computer algorithms to do a lot of this vetting for us, to kind of weed out the people that we deem might have conflicts of interest before they give consumers advice. And then we also added a human element to it, because I'm not fully prepared to fully lean on technology and AI to do all of it. Right. So enter a human. Once they meet the technology background check, then a human comes in, background checks them. And so it's a platform that just connects. It's for women. It connects women to people they can trust based on our algorithms. And so I didn't trust the regulations to do it. So I thought, how fun to actually disrupt and change an industry through capitalism and not regulation.
Yeah, it's very interesting. I want to dive further into that company. So essentially what you've done is you have your business, which helps people manage their assets. And then you have another business that you're building, which is a platform to connect other people with other businesses in a similar field that uses technology to do a lot of checks. And then a human comes in and basically determines whether the algorithm was true, was accurate, and then creates a list of people who are verified to be acting in their client's interest.
Yeah, I'm actually delivering really high quality consumers who are looking for what we offer, delivering it to our competition through this extra business that I built. Really, because we're hitting capacity. I'm growing as fast as I can grow a service-based business to continue to deliver the quality that I want, but I'm still hitting limitations. And so because of those limitations, the technology is literally delivering my competition more business, just because I truly believe in the concept of putting consumers first.
And it's a win-win situation. This is I think about it. Well, first I want to say that the human in the loop is definitely the right strategy, particularly because these LLMs, the last 40 years of automations have been deterministic, meaning that you put in an input, you get an output. It's the same thing every time. There's bugs and everything. But with LLMs, what makes them so valuable is their hallucinatory ability to become creative and predict things and that are creative and that are creating false things. And so if you're not checking it with a human being, there's going to be a lot of people who run into what you're avoiding, I think, in a very good way. And then the other thing I wanted to mention is the win-win situation. This gets into sort of spiritual, philosophical territory as well, is that if your main interest is the customer and you give them a win, you therefore also win. But you can also enable your customer or your competition to win as well, and that puts you in the center of this thing that's causing more wins. And this is the beautiful thing about capitalism, is that there is this selfish interest, but you don't need to be 100% selfish. Like, even if you are 100% selfish, you can contribute to it. But that comes down to what I would say is the level of consciousness of the actors in the system. And we've been talking about like large systems where you have like Bernie Madoff's. Bernie Madoff's was not a win-win situation. He was like a win for me, lose for everyone else. And do you agree? Do you disagree? What's your take on win-win situations?
I completely agree. And actually, this is interesting if we're kind of going into this more philosophical, because I've always had, service-based financial services companies. I've also had, I do have, I've had a branch of a lending business as well. And it's been it's very fulfilling. I truly help people, but I help rich people have more money at the end of the day, if you really boil it down. And it's fun, it's strategy. We save money in taxes. Like, I love it. It's like a big puzzle. But when I launched this technology company, it's something that is truly a passion project, right? Disruptive, change the face of financial services, make it better countrywide for thousands, hundreds of thousands of humans. It's a passion, totally different than I'm truly passionate about what I do in my service-based job, but what I can do with this technology job, it's really fun. And that extra passion that goes into a passion project, that's less about me and being in the center of it and more about something that can live beyond me. It's pretty stinking cool. And that win-win of passion, of making the world a little better, that's what people always talk about. If you love what you do, it'll never feel like work. And it's been pretty neat to build something that you're truly passionate about, and you just feel like everyone's winning by this company existing.
Now let's go into LLMs. Are you guys using large language models or other AI algorithms, or do you work with that?
So for the technology company, yes, we're dabbling in using it in different ways. Again, it's a baby technology company, so a lot of what we're doing is still in infant stage. For the financial planning company, people are trusting us with their life savings. We're not experimenting or dabbling, and thus far, robo advisors have not taken off. The algorithms have had kinks, which lose people money. And so, from that perspective, the only thing that we're using LOMs for on the financial planning business would be like, help us write a newsletter, or some of my brand new advisors, why don't you do role play with ChatGPT and actually say, this is how I'm going to pitch this to a client, this is how I'm going to explain it, and like using it as kind of more like a communication role play. But it's very much nothing that's impacting the consumer on the financial planning business.
How many employees do you have for the asset management business?
So we have 8 W-2s, but we have a lot of 1099s as well. So we use traders that also serve similar businesses as mine. So we have some of these really brilliant investment traders that'll put together portfolios, but they're really hard to capture and hold in one company. So they'll serve maybe 4 or 5 different RIAs. So they'll serve us as a 1099. So we have a lot of different contractors, 1099s, independents that are also part of us that make us a lot bigger, but they're not only ours.
Yeah, that's really interesting. It gets back to the point we started with, which is about the nature of work and the nature of remote work. How has remote work changed, given like that it's such a regulated industry, how has remote work changed the business itself within the United States? As we discussed before, since you're above a certain level in the SEC, you can go to whatever state you want and work. But if it were smaller, then they would have to stay in one state, right? The owners of the company and all the W-2s working at the company?
Not necessarily. And there's some like logistics in there. So if anyone like really was actually doing this, there's, you have to notice file with the SEC to tell them that you're doing business in another state. So you don't just get to do it willy-nilly. There's some steps in there. But as far as employees, this is a totally different regulatory body. Now we're talking about employment law, and now are we doing the right things through our payroll system and doing the right things for employment law to have an employee in that state? So now we're talking about something different than the financial regulations.
Yeah, interesting. And so we've got 8 W-2s, 1099s. What are you most excited about in the next couple of years?
Oh, excited to see a technology company become like something disruptive, right? That's a huge excitement for me. I bought a second home in Michigan about a year ago, and so this summer was my first summer working from somewhere different, right?
Ooh.
Talking about borders.
Yeah.
And so my Arizona-based team, it's running without me on a day-to-day basis in the shop. Like, so I'm really excited about seeing this business become something bigger than me, because it's been circled around me a lot, and it's been, growing pains of a business where I take a vacation and then there's a fire that only owner can handle, and I have to stop what I'm doing in Europe and make sure that I handle the business issues. And so it's getting to a place where it's not circled around me anymore. So I'm really excited to kind of see it start breathing on its own.
And this gets into something very interesting in terms of business as well, because I imagine that you can also help your clients understand how to do that same thing, because so much of business, it goes back to the psychology discussion we were having about how you have to help these older people who are getting ready for retirement unwind the limiting belief systems that stop them from finding the right deal so that they can avoid retiring. There's also this business sense, which you just mentioned, which exists for a lot of different business owners. Is that something you help your clients with as well, is understanding how to do operations in their own business, or is it purely in the financial sense?
We're not stepping in and helping with operations in businesses that I don't know how to do operations in, right? I have lawyers and doctors and all these different types of businesses. So I'm not going to be the best and brightest person to help with operations for that specific business concept. We do help with the money part a lot, and then we help with like the bigger picture entrepreneurial journey. And so yes, if your exit plan is your multiple that you can sell your business for is totally different if you are an integral part or if you're not. If you're not a really important part of that business and it can run without you, it's going to sell at a higher multiple. You're going to make more money off of this. So how can we get you out of the day-to-day grind of your business so we can make more money when it comes time to sell? And so that is something it's a multi-year journey that we do start talking about. And I practice what I preach. I'm trying to do it as well.
How do you value businesses, or how do you help your clients understand how to value their own businesses?
So each industry is going to have experts that know how to value and then also the buyer. At the end of the day, it's the buyer. It's a marketplace. What is a buyer willing to pay for this, right? So what area are you in? Is there a market for your type of business in that location? But it's a multiple of EBITDA. Usually, you can kind of get a set idea of this industry in these type of markets will get this type of multiple of EBITDA. But it's based on a lot of the fundamentals of or the operations of the business of how it's running. Again, if the owner is the center of it, which happens a lot with professional services. So if the dentist is the center of the business and we pull him out and all the clients leave, it doesn't have a lot of value. So as much as you could try to say it's a multiple of EBITDA, it's also like when you look behind the curtain, what's happening in there.
And then and you're building a technology company as well. And I love thinking about technology, and technology companies are usually scalable. And so it puts all of the things we've been talking about that your clients are dealing with, that you've dealt with as an owner, and then it puts them on steroids, essentially, all those problems. Can you talk more about what you are learning from building this technology company?
Oh, well, the big learning curve was I'm a money person, right? So I got a quote of what it was going to cost to build this technology. I'm not a developer, so I was, outsourcing the developing. I hired for that. And it was, I kid you not, 30 times more money to build it in the States versus building it in India. It wasn't even close. So I built my MVP overseas, and the business concept serves women, and my sister and I are the founders. So we're trying to talk to a culture of men that really didn't even respect us to start with. And then the business was, empowering women in money, which they didn't really respect the concept. And so this was an uphill battle that we signed this contract with a team of male developers in a culture that didn't necessarily believe in what we were doing. And I felt at times that they were sabotaging us. I vividly remember sending an email to my sister, and I'm like, this is spite code. I know that this was intentionally mean. Yeah. Like that was the subject line was spite code. So That was a big learning curve for me. And then, version one, version two, I have on the team American developers. They're actually
Great.
Arizona-based
Great.
developers.
Yeah.
So actually speaking to developers, like, and that's a whole new world and a whole new language of like how to explain my vision to someone who writes code, and then also look at the code and make sure that I'm getting what I want. It's been a huge learning curve. So that's a lot of where I'm at right now, because we're still in the like iterations and building and making it better and getting feedback part of
Yeah. So
that. So it's live, but I want it better.
Yeah. Because version one and version two, there's always a huge difference between version one and version two, and I love that you actually brought it in house, because particularly for technology companies, if you can't outsource the product, it's got to be in house, because it's such an integral part of scaling it. And I have done business in India. My second startup, I found an investor who ran a development shop in Chandigarh, India. And he actually, instead of working remotely with the development team, some of the problems that I imagine you faced in that, he flew us out to India, and we lived in Chandigarh, India, working directly with the company. And the culture of India is fascinating. They speak English, but this shows us that language, just knowing a language, also doesn't mean that much, because there's also the cultural background in which the language sits. And I now stay away from outsourced development in India, specifically because of misaligned culture and misaligned incentives, for the reason that I mentioned about building technology companies. And so that's actually one of the reasons why I'm down here in Argentina, is that Argentina has this, it's probably a little bit more expensive, and it's getting more expensive in Argentina, but the cultural challenges are much more fun to deal with, because in Brazil, Argentina, the United States, we're all very similar cultures. We have a lot of differences. I don't mean to say that it'd be easy to work in Argentina or Brazil, but far, far easier than India. And so the technology platform, so you're building, is it a marketplace? No, it's you're evaluating various companies based on their online signal that they're giving off on these various things. Is that accurate?
It's more detailed than that, right? We've got some we've got some APIs that we're pulling data that's like they're active licenses. So we're pulling SEC data, we're pulling complaints that have been legally filed against them. We're pulling, background check-esque information. So it's not just like, do they have a nice social media presence? We're pretty deep in there. But I actually wanted to ping back to India culture, just because you've dealt with them before, and this was something that I didn't know, and I learned the hard way. And I'm wanting to know if you had the same experience. So I was doing these Zoom calls with some of our India developers, and as we were talking to them, they just kept like shaking their head at us, and they kept shaking their head no, and I'm like, do they not get it? Do they not agree with it? Are they not going to do it? Is that a no? I'm not going to follow direction? And they just kept shaking their head no at us. And I had to Google this, because I remember talking to my sister, and I was like, they're not going to listen to us. They just keep saying no to everything, or they don't understand. Like, maybe there's a language barrier. And that is like a nod. So we nod when we understand the Indian culture, the wobble, the head wobble. That's I understand, but it didn't translate. I had to Google it to realize that was a signal of understanding.
And as I see you doing it in the video, the listeners won't be able to see it. You're actually not doing it either. So there's a specific muscle that needs to be engaged, and it's the Indian head wiggle. And let me see if I can do it. It's been a long time. It's like I actually know, now that I've studied enough anatomy, there's a specific muscle. It's the occipital muscles. So the whole skull is basically kind of like in a bobblehead kind of thing. And that can mean yes, but it can also mean no. And also the other big factor in terms of India is that a no or a yes doesn't mean a yes. A yes means this could potentially work out, but in my culture, we don't say directly no, so I'm not going to say no to you directly. And I don't want to say that all Indians are like this. A lot of Indians aren't. But and it's so interesting too, because going back to the technology, a lot of Indians actually make up what Silicon Valley, most of the 1980s and the 1990s, which made Silicon Valley so powerful, were Indians. But Indians who had left their home country and had in most cases had actually become American. But that's the difference between Indians in American versus Indians in India who have only experienced Western culture through movies and Zoom meetings, and it's just like a total gulf I'll do business with Indians, but not at a development shop for sure. Which really gets into the history of technology as well. The history of technology goes back to with outsourcing specifically. There were these outsourcing giants. I think Wipro was the big one, and what they served is there's two forms of outsourcing that happened in Silicon Valley. There's one outsourcing the actual silicon, the silicon chips. That mostly went to Taiwan, China, Japan, Malaysia, and that was because the unions inside of California had started to demand a lot of things, and so they started to go to Taiwan. It's why Taiwan now has this just giant system of building the hardware. Then the other one was the software. And so they would outsource these, like Microsoft would outsource a large piece of their business to India. And so like large businesses in India would basically grew up as with Microsoft as their own client, or Oracle as their own client, and they just created these giant things. And then in the 2000s, when I started to get into outsourcing, I was like, well, if these giant companies can do it, then I can do it too as well. And then I had some very interesting cultural experiences to make me realize how difficult it is to do international business. And we could actually then talk about this as well, because I imagine that you're mostly focused on the financial regulation in the United States, but would you ever consider getting across this regulatory mess of trying to do what you do in the United States inside of another country? Or is that just like not interesting?
I've had a good handful of clients that are cross-border clients. Canada, United States, which is easy, some that are Europe, United States, which is seemingly easy, some, South America, United States, which is seemingly a little bit more complex. But I dove into it because I love to learn. So I dove into it and wanted to help these clients. And as you get deeper, most advisors who are cross-border advisors and help with the financial nuances and tax nuances of how to make sure that you're not overpaying and double taxed more than necessary in both of these countries that you're maintaining two residents in. You really need to be specialized in you'll only be specialized in maybe 2 or 3 countries. So the specialist that I pulled in, like, I have a specialist in my Rolodex that I call that is only Switzerland, United States, and that's all she does. And then I have another one that's only Canada, United States, and that's all he does. And you have to be really specialized because the nuances are too great for someone to just say, I help with cross-border problems across all these countries. You can't know it all.
Yeah, that's very interesting. And it reminds me, in my experience down here in Argentina, I've been living here for 9 months now. I got my student visa, and there's all these other people who are trying to make it work, many of whom are from the United States and working remotely, and we had this sort of induced COVID remote work thing that spread everywhere. And then now companies are trying to put a plug on that because they don't like it. A lot of companies were forced into a transition that has hurt their bottom line pretty strongly. And so now they're trying to retract it. And so one friend in particular is an American guy who loves it down here, has a great stable job, was allowed to work remote, and now his company is starting to change their policies. And they're a large company, and it doesn't really matter to them too much to make the policy really, helpful for his specific point. But it all comes down to going back to that thing that we started with. How long are you in Argentina? Are you there for longer than 6 months? And so it's all these crazy things that are really interesting. I love this conversation because it's not only been from the aspect of technology, doing technology businesses across borders, but also financial things across borders. And this kind of brings a good time to talk about crypto technology. Do you are you familiar with cryptocurrency? Are you interested in it? And what's your take on how that's going to impact the financial?
So when it first came out, I got a Coinbase account just so I could speak to it.
Yeah.
So I have, a very small percentage of money in my Coinbase account, and I've had fun and traded. And so I can speak from personal experience to it. For any clients that I'm advising, I still see the regulatory risk as pretty strong. And that's what I would say a lot of people aren't speaking about, because the government can very easily step in and say, hey, this is money. We want transparency so that we can make sure, drug dealers aren't dealing in crypto. So we want to know where money transactions are going, just as they do in normal banking. This is very foreseeable that the government will step in and say, we need transparency and we need all these we're going to implement all these red flag laws on crypto just the way we have on normal banking. I can visualize this because I work in this regulated industry, and they want to see what's going on with money so they can get their tax, right? The IRS will want to get their tax, and so they want to see it. The second they regulate it and it feels just like your normal Wells Fargo bank account, the cryptic value of it, the underlying value, which is the secrecy, the cryptic part, is gone. And so are we losing a lot of what has made it valuable when those regulations come into place? And so I think that one's just, it can happen in the drop of a hat, and you can lose a lot of value pretty quickly. So I wouldn't go all in until we really know how governments are going to regulate this.
And yeah, I can give you specific examples of those things that have happened recently. One is so we've got Coinbase, and Coinbase knows what you've just said, and they're the leader in terms of making sure that they don't go across the regulations. They're in all the other countries, they could use another platform called Binance. And Binance doesn't implement Know Your Customer regulations. Coinbase does implement Know Your Customer regulations. And so Binance, the CEO of Binance, I don't think had ever set foot in the United States and was running his business. And there's a key other point here, which is very related to what we've been talking about, which is that the number one use of cryptocurrencies is not Bitcoin, it's not Ethereum, it's stable coins, either on the Ethereum network or other things. And a stable coin is essentially $1 to $1, but electronic. And so Binance is one of the largest markets, and they have their own USDT. And so the CEO of Binance, who I don't think did anything illegal, maybe not, I have to go research more, he is now under US custody. So, and he was in a non-extradition country. So he was inside of a country that is supposedly not going to extradite their people to the United States government, and he's now under U.S. federal law. And so, yeah, it's a very interesting thing. There's a few other things that I wanted to mention about that specific one. It's like, oh yeah, then there's Tornado Cash. Tornado Cash was a technology that was built by anonymous developers who built this way of mixing. You were talking about transparency. They were mixing transactions so that it would stop the U.S. government's ability to track transactions. They were also put under U.S. custody, and so it's like, and the U.S. can do this for a long time. The problem is that inside the U.S., you're absolutely right that this will, it's like, for me as a U.S. citizen, it's like I have no choice. I can't participate in this world that's going to be created, which I'm going to explain later, but outside the U.S., going to India, talking about Nigeria, talking about Argentina, these countries have had governments that are much more predatory than the United States so far. And they do all sorts of crazy things with their economy. And so they're all using these stable coins to transact outside of their government's ability to and all that will continue to exist, even though the Binance guy is now under U.S. custody. So there is going to be a lot of innovation. It's just like, as a U.S. citizen, those U.S. citizens are not going to be able to do it for these topics that we've been discussing about regulatory or anything like that. If you have anything else that you want to say on that, I'd love to hear it. Otherwise, we got about 10 minutes left.
Yeah, we can move on to another topic if you'd like.
Yeah. So, so what are the next steps for this business? You're on V2, and you're going to go on to how much further for V2, and what's in V3?
V2, I think our launch date is in 2 days. It was supposed to be a week ago, and the developer said we needed just about an extra week to do some last minute touches. From our consumers' point of view, it should kind of look and feel very similar. From the back end standpoint, we've just enhanced a lot of technology. It was originally built in and around an admin panel that was WordPress, if you kind of know anything. And so now we have our own personalized coded admin panel instead of using the WordPress admin panel. So just like from the backend standpoint, it's a more robust technology, and it's going to automate a lot more, because there was a lot of user points that someone needed to go in and click a couple buttons. So it's becoming more of a technology company the more we grow and we go to the next versions. But from the user standpoint, it's working, it's live, it's connecting people. It's pretty fun and special. And I really am. What's hard, I guess I should say, is because we're matching, right? We're matching users who say, hey, I want someone who's not like a high commission salesperson that I know just, has my best interest at heart. So we have these users, and then we need to make sure we have the vetted advisors to connect them with. And so it's this balance of making sure we have the right marketplace of users and advisors, the right number, because you don't want to be skewed in one direction or it's going to be a bad experience. And so we've had to launch slowly in different markets, just so that we have that right balance in each new market we've launched in. Which is complex of doing this go-to-market strategy in launching slowly across different markets. And this is where I am not a technology founder, right? I'm a finance person who knows how to build profitable businesses. And so my go-to-market plan that I keep looking at is very slow. This is how we're going to slowly build this profitable business. And like, as we launch in new markets, make it profitable and launch in more markets. And every time I get around technology founders who are not my people, but they're becoming my people, they're like, what's your burn rate? How much are you spending? Are you raising capital? Like, go across the country wide, fast, and spend a lot of money and go negative, because that's what tech founders do. I'm like, but I could just make money the whole time. I don't have to burn money.
I agree with you. I've been a technology founder too, but I think it's a specific thing. If you want to raise venture capital, then by all means go do that. Expand really quickly, but you're also increasing your risk of failure. I think slow and steady, profitable, although it didn't fit the 2010 models of technology companies, I think actually makes a lot of sense. And I would be hesitant to follow the advice of going and raising a bunch of money and to do all these things, because particularly what you're trying to do is a marketplace. And the marketplace, I've tried to build marketplaces before. They're really hard. They're really, really hard to get the buyers and the sellers there at the same time. And I think slow and steady, Airbnb didn't do that. Airbnb is a marketplace that ran, they got the venture capital, they succeeded, they did all these different things. But there's a bunch of examples of marketplaces that didn't do that. They don't have as much press. I think it's a very interesting strategy. I'm excited to see where you guys take it. Well, cool. So it's live now? People can actually use that right now?
Yeah, they can. If you're in a market that we haven't launched in yet, you'll just get a notice of when we plan to launch in your market. But yeah, you can go to besavvy.com. It's besvvy.com.
What are the markets?
So right now we're in kind of the Southwest area are the markets that we're in. And I've had a couple public speaking opportunities over on the East Coast. So I have a lot of requests for Chicago and New York right now. So those are top of mind of places we're going next.
Cool. Thank you so much.
Yeah.